Hello and welcome students. In the last video lecture I had explained you shorter sums related to journal entries of Goodwill. Now in this video lecture I am going to start with the bigger sums that are important from the board examination point of view. Already we had discussed that in the board examination one question of this chapter will be asked that will be bigger sum of 8 marks. So at present we are starting with that bigger sums only. So concentrate to the entire video lecture. For that I have chosen question number 6 of your textbook, that is on page number 266. Students, whenever you are referring the video lecture, see that your textbook should be in your hand so that simultaneously you can refer the question with the solution from the video lecture. In the question 6, there are 3 partners, that is Rohit, Mohit and Virat, sharing profit and loss in the ratio of 4:3:2. It means there are 3 partners and their profit sharing ratio is 4:3:2. That is old profit and loss sharing ratio. Balance sheet of the firm as on 31st March 2017 was as under. Balance sheet, old balance sheet has been given to you, and after the balance sheet the adjustments have been given to you. Now in the balance sheet referring to it, that is capital of the 3 partners is given, reserve fund, workmen's compensation reserve. Now reserve fund and workmen's compensation reserve, as that we were doing in admission, we were distributing amongst the partners in their old profit and loss sharing ratio. Same way in retirement also we have to distribute this accumulated profit or accumulated loss amongst the partners in their old profit and loss sharing ratio. Then afterwards partners loan, that is of Rohit and Mohit, and last that is creditors. Now on the asset side, referring the first entry, that is of Goodwill. So this is the old Goodwill before the retirement of one of its partner. So this Goodwill is to be distributed amongst all the partners including the retiring partner in their old profit and loss sharing ratio. Land and building, machinery, stock, debtors, bank and advertisement campaign expenditure. Advertisement campaign expenditure is also accumulated loss. So as we are distributing accumulated profit, same way accumulated loss will also be distributed amongst the partners in their old profit and loss sharing ratio. Now looking at the adjustment, Rohit retired on 1st April 2017. It means out of the 3 partners, the first partner, that is Rohit, is retiring and Mohit and Virat are continuing the business. Terms of retirement is as under. First one, value of land and building is 1,80,000. Value of machinery is to be reduced by 15,000. Here also we have to prepare the same account. See, after the adjustment it has been given to you, that is prepare revaluation account, partners capital account and balance sheet after retirement. So in this type of sum also, as we are preparing an admission, same way in retirement also same accounts and statements that we have to prepare, that is revaluation account, partners capital account, cash or bank account and balance sheet. In certain sums there are very few entries related to cash and bank account, so directly you can give that entries in the new balance sheet in the cash account instead of preparing separate cash account. Now the third entry, that is provision for doubtful debts, is to be kept at 10% on debtors. You can see the debtors value is given to you 60,000, 10% on debtors, it means 6,000. So it is already given 4,000 bad debt reserve, so additional bad debt reserve of 2,000 that is to be created. So due to increase in bad debt reserve, loss will occur to the firm. So that loss will always be recorded on the debit side of revaluation account. Next one, that is rupees 5,000 not payable to creditors. Whatever is the creditors value, out of that 5,000 is not to be paid. Due to decrease in the creditors or due to decrease in liabilities, profit will occur to the firm, and if profit occurs, we are very well knowing that it is to be recorded on the credit side of revaluation account. Then afterwards, valuation of Goodwill, that is after the retirement of one of its partner, that is Rohit. This is the Goodwill of the entire firm. From that we have to find the share of the retiring partner. New profit and loss sharing ratio is given to you, that is 2:1, and last adjustment, that is rupees 20,000 are to be paid to Rohit and balance will be kept as loan. After the retirement, Rohit is to be paid rupees 20,000 in cash, and the remaining balance, whatever is to be paid to him at the time of retirement, that is to be kept as a loan. It is not to be paid at present at the time of retirement. At the time of retirement, only rupees 20,000 is to be paid in cash and remaining is to be considered as partner's loan. Okay, so we have just understood the balance sheet and the adjustments orally. Now moving on to the practical solution of this sum. You can see on the board that I have prepared revaluation account as told in the question, then afterwards partners capital account, bank account and balance sheet after retirement. If you wish, you don't need to prepare the bank account or cash account because there is only one adjustment related to it. So directly over here also you can give the adjustment. But for your understanding, I have separately prepared the bank account. Now after preparing the accounts and balance sheet, the first thing you have to place the opening balances of each and every account. So you can see first entry in the capital account, credit side always the balance would come, that is by balance brought down, that is given to you in your question, capital of all the three partners, that is 1,60,000, 96,000 and 80,000. Then afterwards bank account also balance is given to you on the asset side, you can see that is 63,000. So you can see always asset side is having a debit balance. So I have written on the debit side of bank account, that is to balance brought down 63,000. Then afterwards reserve fund and workmen's compensation reserve. Now these two are the reserves, so that is to be distributed amongst the partners including the retiring partner in their old profit and loss sharing ratio. Now what is the old profit and loss sharing ratio? That is already given in the first line of the question, that is 4:3:2. So you can see I have written on the credit side by reserve fund, that is total, that is given to you 45,000. So 45,000 is to be distributed in the ratio of 4:3:2. So it would come to 20,000, 15,000 and 10,000. In the same way you have to distribute workman's compensation reserve, that is given to you 13,500. So 13,500 is also to be distributed amongst all the three partners in their old ratio, that is 4:3:2. So again you can see by reserve fund, credit side of partners capital account 20,000, 15,000. Sorry, by workman's compensation, that is 6,000, 4,500 and 3,000. So we have to distribute both these reserves amongst the partners in their old profit and loss sharing ratio, that is 4:3:2. Okay, now moving on, partners loan that is given to you of Rohit and Mohit, that is 10,000 and 16,000. So partners loan will also be credited to their capital account. So over here see I have written by partners loan, that is 10,000 in case of Rohit and in case of Mohit that is 16,000. The last entry in the liability side, that is of creditors. Now on creditors, adjustment has been given to you. You can refer the adjustment number 4, that is given rupees 5,000 not payable to creditors. Now what is the value of creditors given to you in the balance sheet? That is 64,000. Out of 64,000, 5,000 value of creditors is not to be paid. So value of creditors is reduced. Due to decrease in the value of creditors, profit will occur to the firm. And if profit occurs, always it will be recorded on the credit side of revaluation account. So you can see on the credit side I have written by creditors, that is rupees 5,000. And simultaneous second entry, always adjustments are having two effect. So the second effect also you give together with the adjustment, so that you don't forget at the end of the sum. Okay, so you can see on the liability side, creditors new value, this is balance sheet after retirement. In admission we are writing balance sheet after admission. Over here we'll write balance sheet after retirement. So creditors new value, that would come to 59,000, that is 64,000 minus 5,000 you will be doing. Then the new value of creditors, that would come to 59,000. So whatever the revaluation of assets and liabilities, that new value of assets and liabilities you will be noting down in the new balance sheet after retirement. Now after completing the liability side, we'll move on the asset side. Asset side, the first value, that is goodwill, that is 36,000. Now this goodwill is the old goodwill before the retirement of the one of its partner, that is Rohit. So this is to be distributed amongst all the partners including the retiring partner in their old profit and loss sharing ratio, that is 4:3:2. So here you can see on the debit side of partners capital account, the first entry that I have written, that is to goodwill. Total value of goodwill that is given to you 36,000, that is distributed in the ratio of 4:3:2. So for Rohit it would come to 16,000, for Mohit 12,000 and for Virat it would come to 8,000. Now next asset that is given to you, that is land and building. On land and building, the first adjustment that is given to you, value of land and building is rupees 1,80,000. Now what is the value of land and building given in the old balance sheet? That is 1,50,000. Now in the new balance sheet, the value of land and building has increased to 1,80,000. So how much increase has come in land and building? That is rupees 30,000. Now due to increase in the value of assets, profit will occur to the firm, and if profit occurs, always it will be recorded on the credit side of revaluation account. So here you can see on the credit side I have written the first entry, revaluation account by land and building. So that is rupees 30,000. How this 30,000 came? That is 1,80,000 minus 1,50,000. So it would come to 30,000. Now in the new balance sheet after retirement, you will note down the new value of land and building, that is rupees 1,80,000. Next one, that is machinery. Machinery is to be reduced by rupees 15,000. What is the old value of machinery given in the balance sheet? That is 90,000. Now it is to be reduced by rupees 15,000. Okay, so there is a decrease in the value of asset. Due to decrease in the value of asset, loss will occur to the firm, and so it will be recorded on the debit side of revaluation account. So you can see on the debit side of revaluation account, first entry that I have written to machinery account, that is rupees 15,000. Now the new value of machine, that would be 90,000 minus 15,000. So the new value that would come to 75,000. Always the new value of assets and liabilities that you will be recording in the new balance sheet after retirement. Now the third adjustment, stock is remaining. So stock value, that is 85,000. No any adjustment is there on stock. So as it is, you will be writing the value of stock, that is 85,000. Stock value, that is 85,000. So as it is, you will be writing the value of stock, that is rupees 85,000. Then afterwards the debtors. Debtors in the old balance sheet is given to you 60,000, and bad debt reserve, that is given to you 4,000. In the outer column it is shown to you 56,000. Now you can refer the adjustment number 3rd, and it is given provision for doubtful debts is to be kept at 10% on debtors. On 60,000 you will deduct 10%, then it would come to 6,000. But in the old balance sheet, bad debt reserve is given to you 4,000. So increase in value of bad debt reserve, that is by rupees 2,000. So that 2,000 is loss for the firm. Due to bad debt reserve, value of debtors is decreasing, and debtors is one of an asset. So due to decrease in the value of debtors, loss will occur to the firm, and that loss will be recorded on the debit side of the revaluation account. So here you can see on the debit side that I have written to bad debt reserve, that is 2,000. Why only 2,000? Because new bad debt reserve that you have to provide, that is 6,000, and already 4,000 has been provided in the old balance sheet. So difference, extra bad debt reserve provision that we have to create of only rupees 2,000, that is 6,000 minus 4,000. Now in the new balance sheet you will be showing debtors, that is 60,000 minus new bad debt reserve, that is 6,000, not 4,000. So 60,000 minus 6,000, it would come to 54,000. Moving on, next, that is bank already opening balance that we have written. Two balance brought down, that is 63,000. And last one, that is advertisement campaign expenditure. We already discussed that as accumulated profit is to be distributed, same way accumulated loss is also to be distributed amongst the partners in their old profit and loss sharing ratio. So over here the value of advertisement expense that is given to 4,500, 4,500 that is to be distributed in the ratio of 4:3:2. So as accumulated profit we are writing on the credit side of partners capital account, accumulated loss will be writing on the debit side of partners capital account. So here you can say I have written do advertisement campaign expense 4,500 that is distributed in the ratio of 4:3:2. It would come to 2,000, 1,500 and 1,000. Then afterwards all the effect of the balance sheet that we have completed. Now moving on to the adjustment, in that first adjustment, second, third, fourth we have completed. And fifth adjustment that is given to you, that is valuation of goodwill, is rupees 1,80,000. Now this goodwill is the new goodwill after the retirement of partner Rohit. This is the total goodwill. Out of that we have to find the share of the retiring partner, and that share of retiring partner is to be distributed amongst the continuing partners. Now who are the continuing partners? That is Mohit and Virat. So it will be distributed amongst the continuing partners partners in their gaining ratio. So over here we have to find the gaining ratio, because new ratio is also provided to you and old ratio is also given to you. So we can easily find the gaining ratio. So you can see, first of all I have shown the working note in middle of the board, that is gain is equal to new share minus old share. Now gain would be of the continuing partners only, that is Mohit and Virat. So Mohit old share, new share, that is 2:1. You can see in the sixth adjustment that is given to you new ratio, that is 2:1. So share of Mohit in the new share, that would be 2/3 minus old share, that is 4:3:2. So it would come to 3/9. So 2/3 minus 3/9, taking the LCM, that is 9. So over here 3 3s are 9, 3 2s are 6, 6 minus 3 it would come to 3. So 3/9. In the same way for Virat, new ratio, that is 2:1, so 1/3 his share minus old share, that is 4:3:2. So his share, that would be 2/9. Again the same LCM, that would come 9. So over here 3 3s are 9, 3 into 1 it would come to 3. 3 minus 2 it would come to 1. So 1/9. So the gaining ratio that would come to 3:1. Now whatever the goodwill share of the retiring partner, now total goodwill is given to you, that is 1,80,000. Out of that we have to find the share of the retiring partner. Now what is the share of retiring partner? That is 4/9. So 9 ones are 9, 20,000. So 20,000 into 4, it would come to 80,000. So that 80,000 is to be distributed amongst the continuing partners Mohit and Virat in the gaining ratio that came to 3:1. Okay, so we have already discussed the journal entry for it, that is continuing partners capital account debit. Now what are the continuing partners over here? That is Mohit's capital account debit, Virat's capital account debit to Rohit's capital account credit. Now who is Rohit? Rohit is the retiring partner. So now posting of that journal entry of goodwill in the partner's capital account. Our journal entry is Mohit's capital account debit, Virat's capital account debit. So on the debit side, I have written the name of the opposite party, that is to R's capital account, that is Rohit's capital account, 60,000 and 20,000. Dividing 80,000 in the ratio of 3:1, it would come to 60,000 and 20,000. Our journal entry, again repeating, that is Mohit's capital account debit, Virat's capital account debit to Rohit's capital account credit. Now you can see in Rohit's capital account credit side, I have written name of the opposite party, that is by M's capital account, by V's capital account, that is 60,000 and 20,000. Total that would come to 80,000. Already we have understood how to do the posting of the journal entries in standard 11th. Now after completing of the entry related to goodwill and its posting, the last point is remaining, that is rupees 20,000 are to be paid to Rohit. So we have to give the amount of rupees 20,000 to Rohit in cash. So for that you can see the journal entry that would come to in bank account credit side, because bank balance that much from the firm is reducing. So the entry that would come to Rohit's capital account debit, see I have written over here to cash account. You can see the entry that would come Rohit's capital account debit to cash account credit. So Rohit's capital account debit side it is returned to cash account, that is rupees 20,000, and cash account credit side it is written by Rohit's capital account, that is 20,000. It means that much amount of balance will be reduced from our bank balance of the firm. So 20,000 reduction in the bank balance. So now 63,000 minus 20,000, the closing balance of bank account that would come to 43,000, and that closing balance or the new balance of bank that will note down in the new balance sheet. So bank will note down in the balance sheet, that is asset side, that is 43,000. Okay, so bank account is clear. Now first of all we have to close the revaluation account. Revaluation account, you can see credit side total is more because there are two entries and their value is more. So it would come to total 35,000. 35,000 minus 17,000, that would come to 18,000. So difference if comes on the debit side, it is profit for the firm, and always the profit of the revaluation account is to be distributed amongst all the partners including the retiring partner in their old profit and loss sharing ratio. So this 18,000 that I have distributed in the ratio of 4:3:2, and that came to 8,000, 6,000 and 4,000. Now the simultaneous second entry that would come on the partner's capital account. You can see I have written by revaluation account, Rohit 8,000, Virat that is 6,000, and Virat that is rupees 4,000. After doing the posting of the revaluation account profit in the partner's capital account, now we have to close the partner's capital account. Partner's capital account credit side, you can see the total of, first of all we will do the total of Virat and Virat. That is M's capital total, it comes to 1,37,500, and for V it comes to 97,000. Now placing that total on the debit side, the difference comes to 64,000 and 68,000 after subtracting the three entries on the debit side of M and V. Okay, so this comes to the closing balance. See, I have written question mark over here. It means that this value has been found out by closing the partner's capital account. So it comes to 64,000, 68,000. So this new capital value of the two partners that I will be noting down in the new balance sheet. You can see I have written Mohit and Virat, that is 64,000 and 68,000. But I have not written the capital of Rohit because now he is not the partner of the firm. He has been retired from the firm. So whatever the balance that comes of Rohit, that will be considered as his loan. Okay, it has been clearly mentioned to you in the question also, last adjustment, and balance will be kept as loan. After paying rupees 20,000, whatever the balance remains, that difference will be considered as a partner's loan. Okay, so here you can see the total of Rohit that comes to 2,84,000, difference that comes to 2,46,000. That is the value or the difference that we have found out, that will be considered to loan account of Rohit. Okay, and that loan account you will be writing as a liability over here, not as a capital. Okay, because now this is the liability for the remaining two partners to pay from the firm. So Rohit's loan account, that is written over here, 2,46,000. Now after closing revaluation account, partners capital account, bank account, last topic, that is balance sheet that we have to close. If the answer comes, it gets tallied both the side, then your answer is correct. So verifying capital account, the closing balance that we have found out, that is 64 and 68. Creditors, that is the new value already we have recorded. Loan, that we already found the closing balance of retiring partner, that is R. So that came to 2,46,000. In land and building, simultaneous entry in the asset side and liability side, new value we are recording together. So land and building new value 1,80,000. Machinery new value, that is after deduction 75,000. Stock, that is as it is 85,000. Debtors, that is 60,000 minus 6,000, that is instead of 4,000 now the new value of bad debt reserve, that is 6,000. So 60,000 minus 6,000, that would come to 54,000. And the last one, that is bank account, that is the new closing balance that we have found out, that is 43,000. So after completion of all the entries, you have to look in the old balance sheet that any of the adjustment or any of the entry has not been remained to be posted in the new balance sheet after retirement. After checking all the entries and all the adjustments, you have to do the total of liability side and asset side. Here you can see the total of liability and assets that comes equal to, that is 4,37,000, 4,37,000. It means our answer is correct. If anyway total of liability and asset sides is not coming equal, it means simultaneous posting of the entry that you have not done in the balance sheet in the asset side or the liability side. So see that while you are posting the adjustments, two entries of adjustment should be posted simultaneously together so that any of the entry will not be missed by you. So students, these are the important sums today we have started with. Still many of the bigger sums will be doing for extra practice. Keep practicing from the video lecture, revise it again and again. Till then, goodbye.